All right, let's just get straight into it, Morgan. My man, on a scale of 1 to 10, how often do you see new traders in the crypto space get absolutely, unequivocally rinsed?
Mate, it's a 10. It is a solid 10. They come in during a bull run, see some dog coin pump in, chuck their student loan at it, and then boom, get liquidated back to the Stone Age. It's a rite of passage, innit? It's a rite of passage they could probably do without. And I think the number one reason, the absolute prime suspect is just pure tunnel vision.
Right.
You know, they're glued to the 15-minute chart, sweating every single tick with absolutely zero clue about what's happening in the grand scheme of things.
Okay, here we go. Chris is about to get on his high horse with his CMT chart wizardry. Let me guess, you're talking about your, what do you call it? Your Crayola on charts technique?
Oh, hey, cheeky. Look, it's not wizardry, bruv. It's basic risk management. It's multi-timeframe analysis, or MTA.
Okay.
And that is the difference between trading like a pro and gambling like a degen. You start top down.
Layman's terms, Picasso, what does that even mean?
It means you start with the big picture, your daily chart, maybe even your weekly chart. That's your Google Maps satellite view.
Mm-hmm.
It tells you the geography, right? Are we in a raging bull market, a disgusting bear trend, or are we just chopping sideways in a range that's boring everyone to tears? First, you identify the big, obvious levels.
Yeah.
The mountain ranges of resistance and the valleys it support.
All right, so you established a macro environment. As a CFA, I can get behind that.
Right.
Fundamentals dictate the macro. But for the day-to-day moves, does it really matter? The 1 hour chart is where the action is, no?
That's the trap. That's the siren song that leads ships to crash, fam. Let me paint you a picture. Go on. You're on the hour chart for ETH. You see this peng-looking breakout. It's just cleared a little resistance. You get all gassed up. You smash the buy button, but you didn't look at the daily chart. Turns out you've just longed it directly into a brick wall of daily resistance where sellers have been camping out for 3 weeks straight. What do you think happens next?
Oh, you get dumped on viciously. The sellers see you coming a mile away and use your buy order as exit liquidity. It's peak.
It is peak, and MTA stops that. See, the pros, the whales, they're not scalping the 5-minute chart.
Right.
They are making their big bets based on weekly closes and daily structures. MTA is how you piggyback on their moves. You use the higher time frame to get your directional bias. So if the daily trend is up, your brain should be hardwired to only look for buys. It's that simple.
Okay, so the HTF is the strategy, the big what. But what about the when? You can't just buy because the daily is up. You'll get a terrible entry.
Exactly. Once you've got your bias from the daily, then you zoom in. You become a sniper. You drop to the 4 hour or the 1 hour to find your precise entry. You wait patiently for a little pullback to a moving average, a little dip, a tidy bull flag, something that lets you join the trend at a discount. The HTF tells you which way the river is flowing.
Yeah.
The LTF tells you the best spot to jump in your canoe.
I like the canoe analogy. So what's the magic formula then for timeframes? I see guys with like 8 charts open. It looks like a NASA command center.
Nah, that's just analysis paralysis. You'll never click a button like that. The classic rule, the one from the CMT books, is a factor of 4 to 6.
Right.
So if you're a day trader on the 15-minute chart, your main trend time frame is the 1 hour. If you're a swing trader on the 4 hour, your macro context comes from the daily. See, it keeps the relationship consistent.
Right. Give us a concrete example. Let's talk Bitcoin. Walk us through a trade.
Easy. A few months back, Bitcoin was rallying hard, right?
Yeah.
But it was approaching a massive weekly resistance level around, say, 65K. On the weekly chart, you could just see it was a historical graveyard for bulls. So your higher time frame bias immediately flips from moon mode to be careful, bruv. You are not longing into that level.
You're looking for signs of weakness.
100%. So you drop to the daily chart, you see the momentum slowing down, the candles are getting smaller, then bam, a big, fat, bearish engulfing candle. The daily structure breaks.
Okay.
We are now making a lower low. The bias is confirmed. It's short season.
So now you're a sniper.
Looking for the entry. Now I'm a sniper. I drop to the 4-hour chart. I'm not just blindly shorting. I wait for the price to pull back up a bit, retest the level it just broke, the classic break and retest. As it hits that level and shows rejection, maybe a shooting star candle on the 4-hour, that's my cue. I execute the short. My stop loss is tight, just above that retest high. Right, but my target? My target is based on the next major daily support level, which is miles away.
So you get a tiny risk for a massive potential reward. A 1 to 5 or even a 1 to 10 risk to reward ratio becomes possible.
That's the beauty of it. That's how you get a killer RR. Now, the biggest mistake people make, what I call the bottom-up Brexiteer, is doing the complete opposite.
Oh, no.
They find a sick-looking long setup on the 5-minute chart, fall in love with it, and then desperately scroll up to the daily chart, trying to find any scrap of evidence to support their emotional decision. It's totally backwards. It's pure, unadulterated confirmation bias.
The bottom-up Brexiteer. I know a few of them. But what about you, Mr. CMT? You can't tell me you don't get lost sometimes. I've seen your trading view setup, man. You've got more lines on there than the London Underground map. Don't you ever suffer from analysis paralysis?
It's a real danger. That's why you have to be so strict. 2, max 3 time frames. For me, it's daily for the trend, 4-hour for the structure, 1 hour for the entry trigger. That's it. Any more is just noise. It's about clarity, not complexity.
Ultimately, it sounds like it's a psychological tool as much as a technical one.
Oh, it's almost entirely psychological. When your weekly, daily, and 4-hour charts are all screaming the same thing, the conviction you have in that trade is immense. You can hold through the little wiggles against you. You don't panic sell for a tiny profit because you trust the higher time frame thesis. You can actually let your winners run. Solid. You've almost convinced me to look at something other than a balance sheet. Almost. That's a win in my book. All right, that's probably enough alpha for one day. Seriously, if you're not using MTA, you are genuinely trading with one eye closed and your hands tight behind your back.
Wow.
You're making this hard game even harder. So if you lot want to argue with Chris about his squiggly lines, or maybe get more practical tips, we've got a chat group. The link's down below in the description. Get in there, share your charts, ask questions.
Yeah, get involved. Let's build a community of traders who actually know what they're doing. Now, here's a question we'd like you to think about, and maybe drop a comment below. What's the one trade you took that went horribly wrong, where, looking back now, a quick glance at a higher time frame would have saved you?
Ooh, that's a good one. A little therapy session in the comments. Enthusiastically, we want to see the war stories. All right, fam, that's a wrap. Catch you in the next one. Peace.